Well, in LifeBlood, this is George G, and the time is right. Welcome to today's guest, strong and powerful Adrian Reid. Adrian, are you ready to do this?
I'm excited. Let's do it.
Let's go. Adrian is a stock trading coach. He's the founder of Enlightened Stock Trading. He's committed to helping people to gain control so they can get on the path to real freedom. Adrian, tell us a little bit about your personal life, some more about your work, and why you do what you do.
Yeah, absolutely. Thank you so much. Okay, so I've been a trader for 20 plus years now, and trading has been a long time hobby turned into full-time vocation, turned into business and mechanism to change the world. Because the more people I can help to grow and build their finances, build their wealth, the bigger the impact. So for me, that's kind of why I do what I do. It's all about helping others master their financial kind of destiny. And the reason I did that is because I quit the corporate world in 2012. I retired because I was making more money trading than I was in my full-time job. And so I left and I started trading at home. And then I realized that I had no one around me. There were no successful traders. I didn't know anyone. And most people who tried it were losing money. And people started asking and I started helping. And then all of a sudden it became a business and a passion to really do that and help people. So here we are.
Here we are. Who knew?
Exactly right. The accidental things that turn into miracles. I don't know.
Yeah, I appreciate that. It fascinating. The markets. I think I've worked in finance for a long time, but I absolutely do not consider myself to be a trader, nor do I consider myself to be an expert in the markets. Have the markets changed with technology and just everything, obviously, that has changed over that 20-year period?
Oh, yes, absolutely. A lot has changed. But it's not necessarily changed for the worse. Some things are better and easier. Some things are harder and more challenging. First of all, costs have come down dramatically, which has made trading, particularly on shorter time scales, easier to do. The barriers to entry are really low, so anyone can get started today on their phone with a small amount of money. But the barriers to entry and the barriers to success are two quite different things. Anyone can trade and have a go, but in order to succeed, you need more than just to have a go. You need to have some rules that work. You need to have the confidence and conviction in those rules, and you need the discipline to actually follow them. And I think that barrier to success has not changed. Probably for the last 50, 100 years, it hasn't changed. It's just technologically easier for people to get started today. But because it's so easy, a lot of people are really losing money, and that's a big problem.
Yeah, certainly. With our, I was going to make a weapons of mass destruction joke, and then I realized that the timing is probably not awesome for that. Anyway, with our weapons of mass destruction, our cell phones, yes, I can hop on a myriad of trading apps these days, and all of a sudden now I'm trading stocks. But just because I'm trading doesn't make me a trader. And I think you can tell me like 80 to 85% of the folks that are doing it are losing money. So I just couldn't agree more. And I want to kind of stick on this market changing with so many people flooding into the market, and then just the way that tech and algorithms and strategy have flowed in. Has that changed the rules of trading, or are those still the same?
Look, there's some fundamental principles of trading that have not changed. You must diversify far more than you think. You must cut your losses and not let them grow big, because if a loss grows big, then your account is in jeopardy. You've got to keep your losses small so that you can recover from them. You must accept those losses because it's an inevitable part of trading. So you have to accept that you're going to have losses, take them gracefully and quickly, and then move on to the next trade. You have to let your winners run. If you're always trying to bank a quick profit, you'll always have small profits. But if you allow your winners to grow, then those winners get big enough to offset the losers. So these are some principles that have not and probably will never change. They're core and fundamental to success in the markets. But what has changed and evolved gradually over time are the entry and exit triggers that really work. There's some things that worked 10 years ago that no longer work today. There's some things that work today that didn't really work 10 years ago. And so the market does shift and behaviors change a little bit. And you've got to have rules that work in the current environment and then monitor those for decay. And back to the point of diversification, if you have several different sets of rules and one of them decays, it doesn't matter so much. You just stop trading that one and you introduce a new set of rules and you have a portfolio of rules that work. Does that make sense?
Yeah. I think that's exactly what I was sort of trying to get at. And so how do I then, as a trader, is that really the endorsement for having community right there, for having other people that know what they're doing that you have access to? Or do you get to a point or do you get to the point where you are the technician and you can recognize, I think you used the term decay, and so I need to move on or tweak this? How does that process work?
Look, great question. I think there's a combination of things here, because at the beginning of a trader's journey, there's a lot to learn, and there's also a lot of disciplines to create. And you can go and try and do that on your own, or you can cobble together your own community of traders who are trying to do it on their own. But the chances are that's going to be a long and very expensive process. Expensive in terms of losses in the market. Mm-hmm. It typically will take people 3 to 5 years of mucking around, trying different approaches to eventually get to a point where they're scraping together some profits somewhat consistently. If you instead take the approach of getting involved in a real trading community with a mentor and a course and actually learn the principles, you have to invest in that, but that really shortens your learning curve. So instead of the 3 to 5 years of mucking around and having big losses and losing your account over and over again, you might have 2 to 3 months of learning and a bit of investment to get the skills, and then you're off to the races. And at that point, after a couple of months of learning, you would probably have a couple of sets of rules that are profitable and you're confident in. You would know how to run those. You would also learn how to test those rules so that you can monitor them to see, are they still working? And this is all stuff that I do with my students. It's all about, here's some strategies that work. Here's how you test them and validate them so that you can be confident. What questions do you have? Here's how you test to answer those questions so that you really get in control of your own trading.
Nice. Got it. I think that makes a lot of sense. I was just writing this morning about we're dealing with a lot of uncertainty, and we're always dealing with a lot of uncertainty. That when we make a decision, this is something I'm interested in doing, I want to know that barring catastrophe, that this is going to work, right? That the system that I'm going to follow. So when people engage with you, they say, how do I know this is going to work? What do you say?
Oh, good question. The thing is that it always feels like there's a big leap of faith. I mean, the first thing is I trade these systems myself. So when I'm teaching someone, I'm doing the thing that I'm teaching with my own money. So that's one thing. Second thing is, I don't actually want my students to have blind faith in me. So I teach them the rules. I say, this is how the system works. This is why it works. But I also teach, this is how you test it to validate it for yourself. Because at the end of the day, it's your money, it's your account, and it's your psychology. You've got to be able to follow the rules. So the rules are just one small part of it. But once I empower someone to test and validate the rules for themselves, then you can get rules from anywhere. You can get them from books, you can get them from websites, you can get them from chat forums, and you don't have to trust anyone anymore. Because all of a sudden, if you know how to test, you can take those rules, you can put them into the software, and you can say, hey, okay, over the last 20 or 30 years, did this actually make money? How big was my drawdown going to be? How high were my returns? How often did I have to trade? How long were my winners held for? How big were my winners? How big were my losers? All of those things become, readily available. And so you're in control. You're in the driver's seat.
Nice. So the principles that we touched on right at the beginning, that we must accept losses, that's hard for us human beings. We really want to hold on because we don't want to, admit that we were wrong about something. So how do I know or is there a way that I can be honest with myself and say, okay, my personality will be successful doing this, or doesn't that matter?
I've had success with a huge variety of students. So I'm not sure that there's really a personality type you have to make this work. The key driver of success really seems to be confidence in the rules. Because if I could give you a set of rules and they were the best set of rules in the world, but I gave you no confidence in those rules, you'd follow them while you were making money. But as soon as you start losing money, confidence quickly gets eroded, right? But if I gave you the rules and I gave you the skills to test and validate those rules, so you knew exactly how they were going to behave, exactly what to expect, then it's much easier for you to follow those rules. So that's a big part of it. Second part of it is, for one person, one set of rules might be good. For another person, another set of rules might be good. You think of someone who is really patient, doesn't like to, has a slow tempo, really thoughtful, happy to just let things play out. A long-term trend trading system is probably going to work for them. But someone who's a bit more hyperactive, a bit more, impatient to get onto the next thing, a short-term mean reversion system would probably be better. Now, there's a bit of matching the strategy to the person, which helps right at the beginning. But then once someone gets into trading and really masters that systematic approach, you find that you can quickly diversify into other types of strategies that you didn't naturally sort of feel an affinity with at the beginning.
Got it. I think that makes a lot of sense. How many different strategies does a person commonly deploy?
It's going to depend on a few things. A little bit about how much capital you've got. The more capital you've got, the more you can diversify. I like to aim for at least 4. Something long-term to ride big strong trends up. Something short-term to profit from the dips and rallies within that trend. Something on the short side so that when the market goes down, you make money. And then also diversifying into different markets. So if someone is in the US and they only ever trade the US market, you're at the whim of what the US market does. Now, the US market has been great for the last how many years, decade, but it won't always be so. And it hasn't always been so. Sometimes other markets are better. And so I also like to encourage to diversify, offshore into different markets, which is nowhere near as scary as you think, because it's all just stock charts and it's all just objective rules. So I'm in Australia, I can trade US stocks, I can trade Hong Kong stocks, and I can trade Australian stocks, and it still only takes me 20 minutes a day.
Wow. So walk me through that process. Let's just say that I say, hey, this sounds awesome. How do I get started? How much, just all the resources that will require me to put forth to become successful?
Okay, cool. So you need a couple of things to get started. You need a little bit of capital. Now, depending on which market you trade, it could be as little as $500 or $1,000, or it could be as much as $10,000. The US market is pretty easy to get into. There's low minimum trade size, so you don't need a huge amount of capital. There's the market. You need a broker. The broker or the platform you're trading on doesn't matter nearly as much as what people think. Everyone's like, oh, do you use Thinkorswim? Or, oh, do you use Interactive Brokers? Or, oh, do you use this or that? Like, that's not the main game. The main game is having a set of rules that work and you following them. So capital and a broker and some rules. The way the systematic approach that I use and teach is you have a simple set of rules that you apply to the market each day or each week. And when you have some trading software where you run these rules and it spits out which trades or which stocks meet those buy criteria today and which stocks meet your sell criteria today. And so the daily trading process is simply a matter of updating your data, running the rules, finding the buy signals, finding the sell signals, placing those trades, and turning off the computer. And so it literally takes 20 to 30 minutes end to end to run a portfolio of, somewhere between 5 and 10 systems every single day. Now, the learning to get started is another thing. If you want to actually accelerate your learning, get into this in a couple of months rather than several years, then it takes a course and a mentor and some guidance on how to do that. So my program, the Trader Success System, for instance, will take someone from complete beginner through to very advanced, confident, systematic trader with a very diverse portfolio of systems across different strategies, different markets. And it'll do that in as little as a couple of months.
Nice. Okay. Well, I think certainly people's ears probably perked up the idea of just being able to learn the system over several months and then just to spend 20 to 30 minutes a day reviewing everything, plugging everything in. And then from there, this is one of those really depends kind of a question, I'm sure. But for people that wanted to get to a place where they could replace their full-time income of, let's say, $50,000 a year, how much money would they need to be putting forth? How would that work?
Yeah, look, this is probably one of the biggest misconceptions that people come into the markets with. It's like, oh, I'm going to be a trader. I'm going to trade for a living and replace my income. Can I do that with my $5,000? And the answer is, sadly, no, you can't, because you got to work out the math. Let's say the very best traders and fund managers in the world average in the long run 30 to 40% return per year. So start with that. Most newbies will come into the market thinking, oh, can I double my account this month? Or maybe can I double my account this week? And the answer is yes, you probably can, but the following week or the following month, you're going to blow it up and lose everything because you're taking so much risk and leverage. So what I really want people to think about is a long-term sustainable career in trading. Now, not a career in the sense of it takes 12 hours a day for 7 days a week. It's like you said, 20 to 30 minutes a day after you've done the learning. And you can run it alongside your job and build your wealth. So if you're starting with $5,000 or $10,000 and you can compound your wealth at 20, 15, 20, 30%, 40% per year, you'll be doing very well. Then what you've got to do is save money, add it to your account and build the account size. Eventually, when the account size is big enough, then it starts to earn, equal to and then more than your salary. But if you just did math on that, it's not a small number, unfortunately. It does take a fair bit of capital to replace a real income. But what's interesting, and let me, just give you some reassurance on this, the biggest psychological freedom comes not when you can quit your job. It comes when you know you'll be able to quit your job. I remember sitting on a bus, this is many, many years ago, and probably only 5 years after I started. And I remember sitting on a bus going to work thinking, oh my God, it's working. My account is actually growing and it's like making money and it's only that much time and I've still got my career and both things are making money. And it sounds crazy, but when my account was only at about $30,000, I knew I was going to make it. I was nowhere near it, but that psychological trigger of I have this working, that's the big first step towards freedom. And you'll be amazed how much better it feels when you've got that and you're turning up to the office and, the boss is being a douchebag or whatever. It's, you can cope with that because you've got something else. So don't put so much pressure on the trading to, I'm going to trade for a living next week. You won't. It's actually a hard game, but it's a rewarding game. And the good news is if you're trading with $10,000 or $1 million, it's still only 20 or 30 minutes a day with this approach.
I love it.
So as you build the account, the returns get better and better and better for every unit of time you put in.
That's well said. Well, Adrian, the people are ready for that difference-making tip. What do you have for them?
The biggest thing you can do is acknowledge that if you don't have rules, you're probably gambling. And gamblers don't win, at least not consistently in the long run. So what you need to do is take a big step back, reduce your risk, put in place a set of rules you can actually test and validate to ensure they work. And then follow those rules consistently and just keep doing it. Crank money into the account, and before you know it, you're going to be wealthy. That's the key. Trade with a system that works, keep your risk low, and stop blowing up your account. Because people take so much risk and so much leverage trying to get rich next week that they keep losing their money. And if you keep losing the money, you never get to the end goal. You've got to actually grow the account. And to do that, you can't destroy the account. You've got to stay in the game. So stop trying to get rich tomorrow and start trying to get rich in 5 years' time. And I think you'll find that you'll be a much better trader and much more successful.
Well, I think that is great stuff. That definitely gets a come on.
Come
Adrian,
on.
thank you so much for coming on. Where can people learn more about you? How can they engage with you and your program?
Thank you. Been an absolute pleasure to be here. Thank you so much for having me. enlightenedstocktrading.com/lifeblood. I've got some resources there to help people get started. So there's some free resources just to get you into the market, to learn something more about some of these principles so that you can take a big step forward in your trading and learn a bit more about my approach. So enlightenedstocktrading.com/lifeblood.
Love it. Well, if you enjoyed this as much as I did, show Adrian your appreciation and share today's show with a friend who also appreciates good ideas. Go to enlightenedstocktrading.com. That's ENLIGHTENED, stocktrading.com/lifeblood. And Adrian set up a great landing page with a ton of great resources on it for you. Thanks again, Adrian.
Absolute pleasure. Thank you so much.
And until next time, keep fighting the good fight. We are all in this together.